Hi, and welcome everybody to our session today on how does women's financial inclusion contribute to women's economic empowerment and how do we know it? Just thank you all for joining, and I will get started by introducing our panelists here. If you can go to the next slide. There we go. Today we have 3 speakers and panelists and to discuss this issue with us. And we have Alvan from MEDA, she's a gender equality and social inclusion specialist, Sonia Kelly, who's the lead for research at Women's World Banking, and Alethea Donald at the Gender Innovation Lab at World Bank. Next slide, please. And I didn't introduce myself, but my name is Jenny Morgan, and I'm at FinEquity, which is a women's financial inclusion community of practice. And here we have just a little bit on how you can engage with us. We are convened by CGAP at the World Bank, and it's a platform for researchers, practitioners, policymakers, and donors working on this topic. This is one of the topics that is on our agenda for the year. If you could go to the next slide, please. Great. So one thing we've begun looking at is measuring women's financial inclusion and empowerment within financial inclusion. So earlier this year, we carried out a mapping of about 12 frameworks that looked at this. These are the organizations there on the right that were part of this mapping. And our next steps in this initiative is to take stock of how our members are looking at this issue. We'd like to hold a couple of collaborative workshops to identify the domains and indicators that could be a common set of domains and indicators used across with members, and then create a kind of peer learning group, a collab, to test out the application of some of these. So if you could please go to the next slide. In this mapping that we did earlier, there's a brief that accompanies this, and this just is to give you a sense of what is in there. So for each of the frameworks, we looked at how we was defined, what were some of the main domains that were being looked at, how these frameworks are being currently used, whether that was within the context of evaluations or doing gender analysis. And then where available, references to additional resources. Some things are available, online and can be taken and used, or there's guidance on how to develop, your own surveys that are kind of in line with these frameworks. So if you could please go to the next slide. So for today's discussion, what we wanted to talk about was really how do we define we within the context of financial inclusion? Starting point is obviously defining empowerment, and empowerment is context specific and multidimensional. There's not necessarily one agreed upon definition, but that is a starting point. And also, looking at the gender analysis piece, which is where most frameworks begin, to help us understand, how to design initiatives based on understanding the differences and how these products and services are being used. And in a few minutes, we'll hear about an example where the women themselves define the indicators in MEDA's example. So another thing we looked at and understood from this mapping was, there's lots of different dimensions that are looked at within women's economic empowerment, but we felt like the ones that were sort of most applicable to financial inclusion fell into these 3 buckets of access to capital markets, training, agency in terms of control over resources, decision-making within the household or within the business or community, and achievements around education, skills, adoption of technologies, economic attainments. So those are, sort of the higher level buckets, and then obviously there's lots of, nuances in there. And then what I'd like to come back to today after we hear from different initiatives from our speakers is the common challenges they face in measuring women's economic empowerment. I'll share the link to this map and also a blog that goes into this in more detail, but some of what, challenges we heard from other members and potential solutions, but we will come back to this at the end. So for today's discussion, each of our speakers are going to present on their initiative, and then we'll have some time at the end for some audience Q&A. And as you know, those questions need to be put into the chat here. There's a chat, and then there's the question box. If you could try to put the questions into that one, that would be helpful for us. And with that, I will pass it to Leanne. So thank you.
Thanks so much, Jenny. And good afternoon, everyone. Firstly, I wanted to say thank you to Jenny and to FinEquity for inviting me to be here, and of course to all of you for choosing to join us for this session. So my name is Leanne. I work for an organization called MEDA. And I'm going to speak a bit today. Actually, Delphine, if you could take us to the next slide and even the next one. Exactly, thank you. So I'm going to speak a bit today about MEDA's experience measuring women's economic empowerment with a technique called the gender progress markers, which, as Jenny said, is a highly participatory method that allows us to define we and its indicators based on our clients' own perspectives and aspirations. Just waiting for the next slide, please, Delphine. Thank you. So very quickly, MEDA is an international NGO with over 6 decades of experience in private sector engagement and market systems development. And our key areas of technical expertise includes those that you see here on the screen. In terms of financial inclusion, MEDA works with a wide range of actors in the financial ecosystem. So everyone from investment firms to banks and MFIs to Village Savings and Loans Association, to ensure that inclusive financial services are adapted and accessible to our diverse clients and the differing degrees of formality in which they operate. Next slide, please. And underpinning our work across these technical areas is MEDA's Gender Equality and Social Inclusion, or GESI, framework, which envisages systems change to strengthen GESI and market systems through the 3 domains that you see here. So the access and use, agency and rights, and a just and equitable enabling environment, which includes all the laws, the social and cultural norms, the institutions, all of those seen and unseen forces that are influencing behavior and decisions within the market system. And through this framework, we aim to really champion inclusive and participatory approaches that help ensure that our clients' voices are really central to our programming. Next slide, please. And one of these approaches is, of course, the gender progress markers. So the gender progress markers, or GPM, as I'll call them, they describe a progression of changed behaviors in a target group. We can think of them as many indicators of behavior change. And the indicators, or the markers, are ideally co-created with the clients themselves. So this allows women to define the changes that they want to see in their own lives. And also ideally, the GPM requires a local facilitating partner that can lead the process of co-creation and monitoring of the indicators in a genuinely participatory way. This is really important for allowing us to not only strengthen existing community-based development structures, but also ensuring that there's trust and mutual understanding built into the GPM process. And it also helps us ensure ownership and sustainability of our results. So the progress markers themselves are a component of outcome mapping methodology, which is a participatory monitoring methodology that was developed by the International Development Research Center in Canada. And they're designed to measure behavior change more broadly. And it was really CARE International, through its Pathways program, that was one of the first organizations to take progress markers and adapt them to specifically measure gendered behavior change. So inspired by CARE's work, MEDA has adapted and piloted the GPM technique to measure women's economic empowerment in 3 projects so far. Our Jordan Valley Links project, our Nigeria Way project in Bauchi State of Northern Nigeria, and our Senegal Avenue project. Next slide. Great. So today, one of our discussion questions, as Jenny mentioned, is how should we define women's economic empowerment in the context of financial inclusion? And the GPM technique really urges us to reflect on who is crafting that definition. So through this technique, as I mentioned, we learn about the changes our clients want, and we align our measurement with that vision. So here you see examples of definition of an empowered woman and a male champion for women's economic empowerment. These were developed by MEDA clients in 2 of our target communities in Jordan. And in both of these communities, some of the aspects of empowerment included, for example, women gaining confidence and stronger communication skills. In both communities, women felt that to be empowered meant being productive and able to create anything from scratch, as well as having enough patience to challenge the harmful social norms and cultures of shame in their communities. In Southern Shona specifically, clients additionally felt that empowerment is associated with leadership and being bold enough to speak their minds freely in any situation. And for the male champions, for we, in both communities, clients felt this includes men who trust their wife and help her with household chores. A male champion for both communities was one who's proud of his wife's business and supports her in it. And then again, in Southern Shona, a male champion additionally is one that shouldn't depend on his wife financially. He should really be bringing his own income to the table. So next slide, please. Perfect, thank you. Now we've said that progress markers are like mini indicators of behavior change, with those definitions of the empowered woman and the male champions in view. So the progression of behavior change is denoted by 3 levels of change. First, what clients would expect to see as a response to the project's first inputs. Secondly, what clients would like to see as the project activities really begin to gain momentum. And finally, what clients would love to see. So these are the deeper transformations in state, status, well-being, the kinds of deeper changes that may occur even beyond the project lifespan, but this is what we're working toward with the project activities. And you see here again, some examples of a series of progress markers from the Jordan project. So in Kais, clients wanted to tackle the culture of shame around women's business activities. So the behavior change they wanted to see from husbands went from husbands keeping their wives' economic activity a secret to them beginning to talk positively about it to extended family, and finally, husbands talking proudly and openly about their wives' businesses and having the community respond positively toward women's economic contributions. Next slide, please. Thanks. So these different levels of behavior change are measured across thematic domains, and you see those here on the y-axis of the table. For MEDA projects, the domains are generally underpinned by our Jesian market systems framework, which I flashed on a few slides earlier. And of course, informed by a gender analysis in the communities of intervention. So here you have the markers that were developed across 4 domains for our Jordan project: division of labor, agency, self-confidence, and that recognition by households and communities, which we just looked at. And you can see again the progression between the levels for each domain. So for example, in the division of labor domain, moving from expecting that men might help with the household chores and childcare if asked, but perhaps still rarely, to men helping around the house with the kids in order to free up women's time for their business activities, which is the like to see. And finally, to men sharing chores and childcare responsibilities equitably with women, even if it means spending their leisure time doing so, in the love to see category. Next slide. This is another example of the markers developed in the Nigeria Way project. And you'll see that we use the same domains as in Jordan, though the interpretation of the domains and of course the markers are different. So here in Bauchi State, northern Nigeria, clients really wanted to see more changes in their lives around women's right to mobility and travel, so they could access markets without needing male escorts. And they wanted to see more women taking up leadership positions within the community. So just in comparison, what is standard across the markers from both Jordan and Nigeria were these indicators linked to building women's confidence in their business skills, decision-making over income, that shifting of restrictive social and cultural norms, and then of course this theme of increasing men's participation in household work so that women can have enough time to focus on their businesses and maybe just get some rest every now and then. In Senegal, we are still in the phase of co-creation and validation of the markers, where we're really just starting out with the process. And we've shifted a bit in the domains in Senegal. So we're in fact using the 5 domains of the Women's Empowerment and Agriculture Index. And the WEA domains are a bit broader than these 4 that we've used for the previous 2 projects. So that has enabled us to develop some additional markers that are more directly focused on women's productive decisions and, of course, their access and use of appropriate financial services. So all this to say that while this method perhaps puts us at risk of detracting a bit from the idea of having standardized indicators because they're client defined and they really vary from place to place, as you're seeing, the use of more standard domains that are based on local gender analysis and definitely appropriate to the context really serves as an anchor to help frame and support clients' own development of the indicators. And we can move to the next slide. So quickly, the data for the GPM is collected every 6 months. And this is through small evaluative exercises that complement our standard midterm and final evaluations. And we use a survey tool such as this one. But the GPM being a participatory and primarily qualitative method, placing too much prominence on the survey can really prevent us from building the familiarity and the trust that is necessary to get those rich qualitative findings and to ensure better validity of the data so that clients are perhaps not just telling us what they think we want to hear. So next slide. And this is why the survey tool is facilitated in a focus group environment every 6 months. So the tool serves as a warm-up to get participants thinking about the statements and where they place themselves currently on along the levels of change. And we collect that survey data, and at the same time, we can ask those deeper probing questions in order to dig out some of that qualitative data. I should say too that the regular personal reflection and the sharing in that focus group environment also helps ensure client ownership over the results, since they are the ones who are continuously shaping and validating the outcomes that we're seeing. And we've learned that this longitudinal nature of the GPM process not only helps us to capture those complex behavior changes as they're occurring, but it also encourages this trust building with our clients that is necessary, since we're seeing each other so often and we're having these follow-up discussions on what's happening at home and in the business. Next slide, please. Great. So the survey data allows us to draw quantitative conclusions and compare the frequency of our expect, like, love statements This chart is from our Nigeria Way project, and it shows the division of labor domain indicators from the baseline until 6 months later. And you can see, even in that amount of time, a shift, an increase in clients noticing that the changes they would like and even love to see are starting to occur. Next slide. And yeah, at the same time, we get our qualitative findings. This really allows us to see the transformative potential of GPM as a process. So one of the other key learnings that we've taken from this technique is that since the GPM engages not only women clients, but also the men in their lives, the monitoring activities allow a space for dialogue, for reflection, for challenging and shifting some of this thinking around gender and power relations. And those changes might not have occurred among these groups if not for that process. So in that sense, the technique can have empowering and transformative effects in itself. Next slide. Lastly, as with any evaluation process, it's the reflection and learning that needs to take place after the data is collected and analyzed. And again, because we're monitoring so frequently with the GPM, the technique allows us to feed our learning back into ongoing activities as we're moving through the project. So we can use what we're learning to figure out how we need to adjust our interventions and improve upon them in order to strengthen the results. And this final slide, yeah, MEDA has been able to document some of this learning and to develop some technical notes and implementation guides on the GPM process. So I'm happy to share these documents maybe in the chat with everyone, and they're also available on our website, which is MEDA.org. And that's all I have for now. So many thanks for your attention. I'll pass the mic back to you, Jenny.
Thank you so much, Leanne. That was a great overview and helped us dig into some of the differences you're seeing in the different contexts. But now I want to turn to Sonia from Women's World Banking, who's going to talk about their initiatives with their index and framework they're developing. So on to you.
Thanks. Yeah, great. Thank you so much, Jenny. Thank you, FinEquity, and thank you to the European Microfinance Platform for bringing together this conversation. I think from a very personal perspective, this conversation is the most important in my own reflection on my work, and I wouldn't be working on financial inclusion if I didn't strongly believe that it led to women's economic empowerment. One thing I tend to emphasize to my colleagues is that I don't really care terribly much about financial services, but what I care about is what financial services unlock in the lives of women customers. And so being able to talk about this with like-minded organizations and a really stellar group of panelists is a big privilege. So like Jenny said, I'm Sonia Kelly. I'm the Director of Research and Advocacy at Women's World Banking, and I lead a global team of researchers who are thinking about this and other big questions facing the women's financial inclusion space. At Women's World Banking, I put this slide together with our mission and vision. This isn't something I would usually share in this kind of forum, but I wanted to emphasize a few words in this mission and vision because I think it's important to our conversation. In that vision statement, we call out the goal of women building a secure and prosperous financial future. And that goal of security and prosperity is not one that we can measure through number of bank accounts or through percent of people receiving a credit product. And we also mentioned in that vision the context of women in their households and their, recognizing that women are part of the social system in their households and their communities. And I think that's pretty important to us. And then second, in our mission statements, our mission is not to proliferate financial services, but rather by proliferating financial services, we are expanding economic assets, participation and power of low-income women and their households. And that participation and power and assets piece is what is often commonly referred to across measurements of women's economic empowerment. So that's a bit of the context of where this conversation sits internally at Women's World Banking. So if you turn to the next slide, that when we set out to chart our progress against that mission and vision, we wanted to articulate or operationalize, I guess is a better word, women's economic empowerment into a series of domains or rather dimensions that we could meaningfully measure, but that would describe a number of aspects of women's economic empowerment. And these measures fall along that common definition that we often see of agency and resources in measurements of women's economic empowerment. But we decided to break it down into 4 dimensions, and these are based on a framework by Marta Chen from Harvard University. These 4 dimensions are material change. So this is, what you might see in terms of change in income or business growth, ability to cover basic needs. And then cognitive change, which we define as change in awareness, knowledge, or skills. Third, perceptual change. I think this one is really important and also sometimes most difficult to measure, and that's changes in self-confidence and perceived financial security and perceptions of themselves and their business and the import it has to their household and community. And then finally, relational change. And this is the relationships that she has with people around her, with her partner, with her children, with members of her community as well. And so we set out these 4 different dimensions. And then if you turn to the next slide, we drilled these down into very practical and measurable indicators. So I won't read out this whole list because I think it's a lot, but I'm going to leave it up for a little bit and talk through a few of these indicators. And please feel free to take a screenshot if you want to, or follow up with me later. I'm happy to share this and happy to make it a public good if it would be useful for anybody else. So when we go to a particular market context or financial services provider, and when we say we want to measure the women's economic empowerment impacts of financial services, we look at this as basically like a menu of options. So for example, if it's a savings product, we would measure the increase in savings. We would measure the ability to leverage emergency resources. We would measure her ability to grow her business and maybe take advantage of opportunities. With savings, we would also expect to see an increase in her perceived control over her funds if she owns those savings, or reduced financial stress if she is building up a meaningful amount of savings. In terms of cognitive change, if she has savings, we would expect her to have knowledge of where those savings are and what that means, and financial concepts related to that account. And then in her relationship, changes in control, changes in ability to make decisions, changes in social capital as she has more ability perhaps to help her neighbors, increased recognition and respect. And so the reason that I put all of these up as examples of how we operationalize is, I think, Jenny mentioned this at the beginning, that it's complicated to measure women's economic empowerment. The fact that we are discussing 3 very different ways of measuring women's economic empowerment is so important to this conversation, because the way that we measure women's economic empowerment has a huge bearing on what we end up finding and how meaningful it is for various stakeholders, and also for the women for whom we're undertaking this measurement. So with that, that's my last slide, but I have a few other things to say. And so for the organizers, if you want to take down the deck, you can, and I can just speak without slides if that makes sense for you. But I wanted to share a few projects that we are working on using this framework. We have a goal at Women's Women's World Banking of executing 6 impact evaluations using this framework. And those 6 impact evaluations represent a diversity of our priority markets and a diversity of financial services and products. And so I'll give an example of 3 that you can expect to hear about in the next few months, but I don't have a link to you to a report at this stage because we're in analysis on these 3. The first is a savings product that we have been working on with a financial services provider in India. It's a small finance bank. And I think important context to sharing about these projects is that Women's World Banking has an advisory services group which uses a women-centered design methodology to develop products and pilot them so that they have high confidence that they will lead to women's active participation in financial services and their economic empowerment. So we worked with this small finance bank for about 2 years to do customer research, to develop this product, to pilot this product for a number of medium-term pilots. And then when we were ready to deploy this product broadly across their national branches, that's when the impact evaluation comes in. And as you can imagine, because this is an intervention that was developed with real world conditions in mind, and the impact evaluation is not the centerpiece of the engagement, we have constraints that we have to work through with the financial services provider. So in this case, the FSP was not willing to keep a particular group from receiving the product. The product itself is a savings card. It's basically like a cardstock card that's the same style of the card that customers receive when they get a loan. And it's something that customers are used to carrying around. They're used to carrying around their loan card and keeping it in a safe place in their home because the loan officer signs off on it and says when they've made a payment on the loan. And so instead of setting aside a control group who doesn't get the product, we decided to make the control group the people who received a loan and did not receive a savings card before the deployment of the savings card. So like the month before, everybody who got a loan in the month before became our control group. And then everybody who got a loan in the month after the deployment of the savings card became our treatment group. And it's basically like a modified difference in difference survey, if you're familiar with that terminology. So the reason I mention this is because one, we think having some kind of a control group or some kind of a counterfactual is important. It's become even more important in COVID because this study took place over the period of COVID. So we can basically control for COVID impacts and not be surprised when we see massive fluctuations in income and other things. But second, I think it's important to emphasize the real world conditions and having to work with financial services providers when their goal is to get the product out to people and not necessarily the measurement piece. So we try to create a win-win scenario. We've just finished collecting the end-line data that's about a year after the baseline survey was completed. We did surveys with just over 2,000 people in multiple states in India. And so we're looking forward to sharing those results in just a couple months. I'll share more briefly 2 other projects. One is an intervention we have in Cambodia with, and I can say the name of this one, a digital wallet provider called Wing. We're working with factories for digitizing wage payments. And alongside the digitization of wage payments in some of the factories, we're engaging with peer and manager level workers to deliver financial capability messages. So somebody that the wage receivers work with every day could ask questions to, maybe could bring their mobile phone to and say, oh, I don't know how to send money through this, but I know I can see my salary, like how can I work through that? And so with this, we have treatment factories and we have control factories. The factories were willing to randomize on which factory, or the factory owners were willing to randomize on which factories ended up getting the treatment and have these peer and manager level support for financial capability. And so we're moving this forward. It's also a year-long study. We're about to release the baseline insight note, which will give some kind of indication of those, of what those customers care about, how empowered they feel sort of at the outset, what their level of financial health is. And I think that that's going to be pretty exciting, because then we'll be able to have an end line that complements that sort of portrait of a factory worker in Cambodia. And then the third I'll very briefly mention, because we haven't even deployed the baseline survey, we're sort of poised to deploy that in the next few weeks, is with a public sector bank in India that has been instrumental in getting payments out to people for COVID-19. There are very basic savings accounts that they have, or basic current accounts that people, and mostly women, can receive social benefits through. And as part of the deployment of those COVID-19 payments, our advisory team said, this is a great opportunity to move those accounts from dormancy to active use. And so they worked with the public sector bank to develop a solution that would encourage people to actively use their accounts. And so soon we're going to deploy that baseline survey that will measure people's active use of accounts, but also what happens in their economic empowerment as a result. And we're doing that in a state that tends to be fairly conservative in India, Uttar Pradesh. And I think that'll be really interesting, because the level of economic empowerment in that state is lower than in other states in India. And so what we're starting with is kind of a very interesting place with, like we're sort of saying, if it works here, it can work in a lot of places. And so we're excited about that as well. So I'll stop there, but really looking forward to this discussion and bringing out those questions that you mentioned, Jenny, because I think it's so important to build on the work of others, to balance the sort of rigor and academic validity of formal impact evaluations with new and emerging methods, and also with wanting to collect a lower cost breadth of data. Looking forward to discussing those with my fellow panelists. But back to you, Jenny.
Excellent. Thank you so much. And thanks for walking us through, some of those use cases where you're planning to test this. With that, I would like to turn to Alethea Donald, our last panelist from the Gender Innovation Lab. She's going to talk to us about some core set of indicators that they're working on developing, and how they tailor this approach in other contexts, and then what's next. So yes, and just a reminder, I have jotted down a couple of questions. We'll come back to that after Alethea's portion here, but please keep putting your questions in the chat or the question box for us. Thanks. Over to you.
Great. Thank you so much, Jenny. And thanks to the organizers for having me. Next slide, please. So as Jenny mentioned, I work at the World Bank's Gender Innovation Lab, which is a team within the Africa Chief Economist Office at the World Bank. And our mission is to figure out what works and what doesn't to reduce gender inequality, with a special focus on the economic sphere. And we do a bunch of stuff. As you can see in the slide, we synthesize existing evidence, we advise teams on program design, on evidence-based interventions that they can add to their projects, and innovate to develop different interventions and help take what works to scale. But the bread and butter of what we do is understanding underlying constraints and conducting large-scale impact evaluations. We conduct somewhere between 70 and 80 impact evaluations right now in about 24 sub-Saharan African countries. Next slide, please. So I thought, and you know, what we focus on, as most of you will be familiar, in impact evaluation is different from monitoring and evaluation, right? It's not just asking, is the project doing things right, but more on, is the project doing the right things? Next slide. So I thought a good way to present our work is to walk you through our typical impact evaluation cycle and what we learn through it on how women's financial inclusion influences women's economic empowerment. Next slide, please. So the first step in learning something about women's economic empowerment and the relation to women's financial inclusion is to design a good impact evaluation and really think out of the box on what the open questions are that we need to answer. And many times there are several open questions, which is an opportunity to test different ideas against each other. So one example is in Cote d'Ivoire, where we were hearing from women that they were really disincentivized from going out there in the labor force because their income was being siphoned off by their husbands and other family and friends. And so we developed a new type of commitment savings account in partnership with the National Savings Bank there that was automatically linked to the earnings at the factory to see if that would help. Another example is from Malawi, where we tested different combinations and different bundles of financial interventions against each other to see what worked best. The business registration ended up not totally working well on its own, but in a bundle it was highly cost effective. Next slide. So the baseline survey is really the project team's chance to learn more about their population and their potential beneficiaries. And typically we administer questions to a group of future participants, so the treatment group, and non-participants, which we call the control group or the comparison group. And often we interview both the primary man and the woman separately, plus additional individuals dependent on the project. So this could be the provider, this could be the village chief, it could be the in-laws, sometimes the children. And here you can really collect a range of questions to identify the best participants for your project, so who will really benefit the most, but also understanding the constraints that clients face. And for example, in one of our projects, we saw that women were really time constrained. And so we added a child care intervention to our project through findings that we discovered using the baseline survey. Next question. Next slide, sorry. Next question. Great. So the big question is, okay, so you do your baseline survey, but how do you actually capture women's economic empowerment here? And we use a modular approach, which is somewhere in between using completely context-specific measures and having a standardized set of indicators. So we always have in-depth economic activity-specific modules that vary from context to context and project to project. For example, in a financial inclusion project in agriculture, we would really get into the details of their livelihoods, and we would have, plot crop rosters over the last 2 seasons for agricultural projects with questions on who makes decisions over each plot, who controls the sale revenue from each plot and each crop, and really get into the nitty-gritty of the context. And we have tailored measures also for non-survey. When we can, we complement our survey modules with different exercises, such as what we call lab in the field, where you give people different incentives to behave in some way and really see what happens. One thing that you can tease out well from here is women's bargaining power, and see how much more she is willing to pay to control the money herself and not have it go to her husband. But in addition to these in-depth modules, we also recognize the benefits of having a standardized set of indicators that you can track across different countries. And there are 11 that we came up with as a team that we could agree on to deploy across all of our different 70 impact evaluations without too much extra burden in the questionnaire. So next slide. I won't go into these in too much detail, but you can see that they cover the different bases of resources. So for example, access to funds, asset ownership, agency in terms of the input into productive decisions, freedom of movement, and also freedom, over your time, such as sharing of housework, and then more on the achievement side in terms of outcomes, and including happiness, which is a little controversial for us to include a very subjective well-being indicator in an economic, framework, but we thought this was very important to measure. Next slide, please. So now, you've done your baseline, you've implemented your project, and it's time for the midline. And we found that taking an early temperature is really important in figuring out the relationship between financial inclusion and we. And here we typically focus on indicators that are more likely to move, which helps us understand what progress is happening. For example, in Ethiopia, we had to change up the design because we saw women weren't participating as much in the trainings compared to men, and really use these first results to fine-tune program elements and figure out, do you need an extra digital literacy training? Do you need a goal-setting intervention? But also, are there any innovations that seem to be working well and need to be scaled up? And this, for example, was the case in Ghana with the North Volta Rural Bank customers, where we tested different products, different financial products for salaried workers. Some worked well, some didn't. And so then we scaled up on partnership with the bank, the ones that did, and dropped the others. Next slide. So then you do the endline survey, and with this more global picture, you have an idea of the benefits of the program in a variety of dimensions, which innovations worked, and it provides lessons for others. And this helps with figuring out cost effectiveness with program continuation, and also usefully sometimes with attracting additional funding. And usually for us, this then begins the cycle again after we have the endline results and what we call our learn, adopt, adapt, evolve model. For example, we have the psychological business training called personal initiative training that we tested, and we found that it worked much better than traditional business training for women. And then, this got scaled up to over a dozen different financial operations within the World Bank. But now we're working on testing different versions of the same program. So one question was, this was for female entrepreneurs, will it work for female farmers? So we adapted the curricula being tried and are trying this in Mozambique with female farmers. Can it be combined with large transfers or assets for a big jump forward? We're doing this in our adaptive social protection work in the Sahel. Or what if we bring the couple into the process and change couple dynamics? And so we're testing in the DRC, how is it delivering this training through a couple and not just the woman herself? Next slide, please. So what are some best practices we've learned from all this? The first is clearly defining your we constraints. A lot of the work we do is with project teams, and a big step is knowing, oftentimes when you're starting out, something. We have the case, you talk with project teams, they want to do something about gender. They know they're supposed to do something about gender. They're not exactly sure what they should be doing about gender. And so this is really the first step, right? So is the constraint that women are facing in your context that they don't have enough cash, enough time, enough literacy, a combination of all? And are you trying to improve their income, their labor force participation, their bargaining power in the household? Like, what is it exactly, and what would constitute success? The second is being creative about your data. So this applies both for use as an outcome. I remember a project that used meeting minutes to see how often women speak compared to men. And so really thinking out of the box, not just in your surveys, but what is the data out there that I can use? But also in terms of how you can use data to attribute causality. Sonia was speaking earlier about using a rollout date to kind of use as a discontinuity in design, and I think that's an example of how you can use data in a creative way to figure out what works and what doesn't. The third is evolutionary learning. Sorry. So trying something, adapting, and learning together. And oftentimes, I see some projects really spending, and I think it's important to spend a lot of time upfront thinking about the constraints, but it's kind of years of collecting different data and what they think the problem is. And often I advocate, once you've done your due diligence on safeguards, et cetera, just test out a few different things, start out with a broad variety of options and interventions, and then learn through this data-driven process what works, and really see through the data what is working and what is not. The fourth is on co-production. So I think strong relationships and partnerships between implementers, researchers, and the people who will eventually take it to scale is really important. And the last is using validated measurement tools. And often I face the temptation myself to kind of grab whatever measures I can, whatever, before the survey is going to launch a few days before, but using measures are going to be understood by the respondents and get at what you're trying to get at and are conceptually accurate is really important. Otherwise, you don't know whether it's the project that's not working or the measures that are not great. But sometimes these measures are hard to come by, especially in lower income settings. And so I wanted to flag, next slide, this new initiative we have called the Measures for Advancing Gender Equality, which is a partnership with the LSMS, IFPRI, IRC, and Oxford University to generate new validated measurement tools on a bunch of these really important but trickier to measure concepts. So I think I will stop there and pass the mic back to Jenny. Thank you.
Yeah, thank you, Alethea. And thank all of you for presenting today. And I know we've got about 10 minutes left for some Q&A. There's been some questions here put into the chat and to the questions and answer box as well. Let's see, if we go back to maybe the question that Antonique posed first here in the chat was, do you have a sense of how the context geography segment drives what kind of framework would be best used in those contexts? And I know, Sonia, you put in an answer here in the chat, but if either Leanne or Alethea want to speak to this, please do.
Sure, I can speak to that, Jenny, really briefly. And I think I mentioned it in the presentation as well. I mean, for us, as I mentioned, we've been adapting different frameworks in terms of identifying those domains that we want to use to develop our indicators with the GPM technique. And so, and I think you mentioned it at the outset, Jenny, it's really our gender in market systems analysis that really gives us the key themes that come out. And from there, I think that we can use those themes to analyze the different frameworks that may or may not be appropriate for a given context and select the framework that way. Yeah.
Great. Well, with that, maybe we can move. There was another question here from Christelle who was asking about, in practice, how do you collect these indicators, the ability of investees to collect these, and data quality in general. And I know, Sonia, you talked about here that you use quantitative surveys and complemented with qualitative research. And so you were, happy to share some of that as well. I think your point on local enumerators is important as well, that we're not affiliated with financial service providers to help reduce the bias. Bias is a great point in terms of data quality. I don't know, Alethea, is there something you can add there?
Yeah, we also do, as I said, our bread and butter is these quantitative impact evaluations, which we collaborate sometimes with local research institutes, survey firms, but also the implementer themselves to collect. We do have team sociologists that work with us to do kind of tailored qualitative research in settings where we don't think the quantitative is ready yet to fully understand the constraints, or oftentimes when we have a puzzle in our data that we don't quite understand, and then it's sociologists to the rescue. But yeah, so we collect indicators from a variety of partners and do both quantitative and qualitative data, although our volume is greater on the quantitative side.
And this is something I struggle with a little bit. Like, as a researcher, I have existential crises about this. I loved Alicia's examples of alternative data that could be collected, like number of minutes women speak at a meeting, or we often use administrative data from financial institutions. So instead of relying on somebody's report about how much money is in their bank account, like we can actually just, with their permission, get it from the financial institution where possible. And so we're always thinking about, one, the burden on people of administering surveys, and asking for an hour of somebody's time is a lot. And we do compensate people for their time, but we realize that is like a life interruption for them. And especially, if we're calling every day for 5 days to get a hold of somebody, that's an indication that it's not a high priority for them. And then two, the power dynamic. So Christelle's question about whether a financial services provider collects the data is sort of a fraught one for us, because it would be much less expensive, and the financial service provider would be much more comfortable with it because they have a lot more control in that context, and they have some visibility into what people are saying about the products they're using. But it does introduce a power dynamic, and if somebody's afraid that their loan is not going to be renewed unless they look like a very financially healthy person, they're also not going to be giving genuine answers. And so sometimes we have to do creative things, like we have used models in which the enumerators that we've hired that are associated with a local university have to go to the call center of the bank and conduct the interviews in a private room in the call center, but because the bank isn't willing to give out the mobile phone information of their customers. And so so they do it and like sign a non-disclosure agreement. But we think that's really important and even though it's like more expensive and the bank is less interested in that method, like we think it's really important to the validity of the data and also respecting the privacy of the participants in a survey.
Yeah, totally. I'm really excited about the move. I think part of what's exciting about the move to digital is being able to get this native data in the app and see how people, use it, who uses it, and administrative data. I think there will always be a portion that will be done through face-to-face survey to really get at that, in her own words, does she feel empowered? Does she have agency? But yeah, I think that's a really exciting movement. And your point on bias is really important. I think we're learning how even different enumerator characteristics can influence responses, right? We know sometimes women are more likely to say that her husband participates with her in decisions if they're responding actually to female enumerators, which goes against sometimes the recommendation of pairing women with female enumerators. And that's something we hope to do more of in the Magnet program as well, is to test which enumerator characteristics are really influencing respondent answers and in what way.
Oh, that's so interesting. Thanks.
Excellent. So we just have a few minutes left here. I want to get to this final question that's been put in here by Amelia from Grameen Foundation. I'll just read it out. Thank everyone for sharing. This research indicators the sector has been meeting these. I saw a handful of indicators of unintended consequences to we, but I'd be curious if you're asking about these or if it is coming out in focus groups. Would love to hear if any lessons learned on unintended negative consequences. And we just have about a minute, so I don't know if someone feels best positioned to answer.
That sounds like a question for Leanne.
I was actually just typing frantically to Amelia before we run out of time, so I can send that and also speak to it. So thanks for the great question, Amelia. really great question. I spoke a lot about trust and familiarity and trying to build that into the GPM process, and that is really essential. And what we're hoping for with that trust is that any unintended consequences of the project activities will come out in those focus groups as long as that trust has been built. So kind of an adjacent kind of unintended thing that I can think about is in our Jordan project. When we're conducting our focus groups with men, with spouses of our female entrepreneur clients, what we noticed is that they were really giving us those answers that they thought we just wanted to hear, rather than telling us more of what we were hearing from our women focus groups. So our project staff went a step further just to establish that trust and started doing home visits in addition to these focus group discussions every 6 months. And that really helped build even further that familiarity, so that the men became more comfortable and were able to speak a bit more openly and honestly with the local facilitating partners. So but definitely that's kind of the strategy, is that trust building to get at these unintended consequences, so we can either address them through project activities or provide the referrals that are needed to address them. Thanks for the question.
Okay, thank you so much, Leanne, for taking that one. I think that brings us to the close. We have a plenary that's starting now, so please join that. And thanks everybody again. We will share this presentation and contact information with you all. So.